As of the market close on June 16, 2026 at 4 p.m. Eastern Time, Datavault AI Inc., trading under the ticker symbol DVLT on the NASDAQ, finished the regular trading session at exactly 0.3864 per share. This represents a minor intraday decline of 1.68% from its prior closing price of 0.3930, trading on a daily range between a low of 0.3820 and a maximum high of 0.4049. While a sub-dollar share price typically signals a microcap company flying under the radar of major institutional desks, the underlying trading reality of this company reveals a massive divergence between its penny stock equity valuation and its aggressive billion-dollar balance sheet assertions. The market expects Datavault AI to behave like a standard, highly speculative microcap shell struggling for survival, but the reality is that the company is engineering a complex web of multi-billion-dollar structured financing agreements, international tokenization initiatives, and expansive crypto exchange listings that don't match its current $333 million market capitalization. The general sentiment surrounding Datavault AI among retail investors using a standard online investment app or searching popular investing sites is one of deep caution, often labeling it as an unpredictable asset prone to wild dilution and speculative news cycles. When individuals set up a self-investing account on a Robinhood stock trading platform or check their individual brokerage balances, they often look at a stock trading under 40 cents as a mere lottery ticket. The mainstream expectation is that a company of this size will slowly burn through cash until it fades away or faces delisting. However, if you look closer at the underlying corporate maneuvers, the reality challenges this simplistic view. Datavault AI recently shocked the market by announcing a massive $2 billion structured financing term sheet, paired with an exclusive global tokenization mandate, while simultaneously setting up agreements to trade physical commodities like gold, copper, and geothermal energy across global networks 24 hours a day. This massive gap between a 40-cent equity price and a multi-billion-dollar operational narrative forces us to completely rethink what is actually happening behind the scenes. To understand the current momentum of Datavault AI, we have to look closely at its recent market data, daily price swings, and the institutional activity that defines its trading environment. Looking across institutional channels from interactive brokers trading platforms to Fidelity wealth management portfolios, professional investors are trying to reconcile the extreme volatility with the company's grand projections. In its recently reported first quarter of 2026, Datavault AI actually beat analyst consensus estimates for earnings per share, coming in at a loss of 9 cents per share against the forecasted loss of 14 cents. Despite this fundamental beat, the equity experienced severe selling pressure, illustrating the fragile nature of microcap stocks where positive operational data can still lead to a sharp sell-off due to liquidity constraints. The volume patterns show that large blocks of shares are moving through public retail channels, while institutional holdings sits around 35%, indicating that sophisticated players are keeping a close watch but letting retail traders drive the daily price discovery. Macroeconomic pressures are also playing a massive role in how Datavault AI trades on a day-to-day basis. As a technology firm deeply tied to Web 3.0 assets, tokenomics, and distributed networks, its valuation fluctuates wildly based on broader crypto asset regulations and global liquidity cycles. For instance, management has explicitly noted that its distributed edge network strategy is positioned directly ahead of a critical upcoming Senate vote on the Clarity Act, which aims to provide regulatory frameworks for digital assets. If the federal government provides a clear path forward, Datavault AI stands to benefit, but if regulation tightens, its business model faces severe operational friction. This regulatory dependency is exactly why the stock sees heavy short interest and active litigation investigations from firms like Robbins LLP, keeping the stock highly volatile on platforms like the Robinhood app or via professional interactive brokers platform setups. Retail traders looking for quick swings frequently clash with institutional short sellers, turning the daily order book into a battleground over whether the company's multi-billion-dollar revenue guidance is achievable or merely a paper illusion. Comment below how many shares of Datavault AI Inc. you currently hold, or if you are completely avoiding microcap tech assets in the current market environment. When we strip away the recent trading chaos and look at the actual business model, Datavault AI operates as a specialized data sciences and technology firm focused on the valuation, management, and monetization of digital assets within Web 3.0 environments. The company operates through two primary corporate divisions, the Data Sciences Division and the Acoustic Sciences Division. The Data Sciences segment utilizes high-performance cloud computing to create data valuation metrics, such as their proprietary data score and data value systems, which help enterprises track, quantify, and secure their digital intellectual property. The Acoustic Sciences Division is a fascinating legacy piece of the business, holding patented technologies like WISA, ADIO, and Sumerian, which focus on wireless, high-definition sound transmission and spatial audio synchronization. In fact, the company's board of directors recently requested a complete management plan to execute a dividend spin-out of this Acoustic Sciences Division into an independent, standalone public company, a move designed to unlock hidden equity value for current shareholders. Historically, the company has undergone significant structural transformations, including a major corporate name change to Datavault AI Inc. in February 2025 to align its brand with the growing enterprise demand for data monetization tools. Over the past year, the company has aggressively expanded its corporate footprint through acquisitions, integrating digital advertising exchange platforms like NASDAQ and cybersecurity firms like CyberCatch to build an end-to-end secure data pipeline. Financially, older reports show a history of heavy capital expenditures and negative cash flows, typical of early-stage tech developers, which they have funded through private placements and a massive $60 million public offering of common stock completed earlier this year. While this capital raising provided a comfortable liquidity buffer of $250 million and roughly $140 million in working capital, it also caused massive equity dilution, which explains why the share price remains deeply depressed, despite management reaffirming an incredibly ambitious full-year 2026 revenue guidance of $200 million. This massive revenue target brings us directly back to the core tension between expectation and reality as we look toward the future outlook for Datavault AI. The market expectations, reflected in the low share price, suggest extreme skepticism regarding management's ability to jump from a few $1 million in quarterly revenue to a $200 million annual run rate by the end of the year. Management maintains that this revenue is heavily back-half weighted, relying on the rapid commercialization of its Sanctum AI infrastructure rollout and the expansion of its tokenization platform into 100 cities globally. Just this week, the company announced that its newly minted commemorative digital collectible tokens are scheduled to begin secondary market trading on the Biconomy cryptocurrency exchange, marking a major test case for their peer-to-peer data exchange platform. If these digital asset programs gain real commercial traction and generate high-margin transactional fees, the reality will completely shatter current market skepticism, potentially driving the stock toward the aggressive $3 price targets maintained by firms like Maxim Group. Conversely, the operational risks are immense and cannot be ignored by anyone managed via Fidelity brokerage accounts or utilizing advanced tools on a SoFi toting platform. If the Sanctum AI infrastructure deployment faces technical delays, or if the integration of their recent acquisition stalls, the company will quickly burn through its current cash reserves, forcing further dilutive equity raises that will depress the share price even more. Furthermore, if the regulatory landscape in Washington turns hostile toward Web 3.0 tokenization models, a significant portion of Datavault AI's forward business pipeline could be rendered obsolete overnight. Investors are caught in a classic speculative loop. The corporate announcements gained a picture of a global digital asset powerhouse, while the actual stock performance reflects a highly volatile asset that requires flawless execution to avoid financial distress. In summary, the central insight defining Datavault AI is the profound mismatch between its microcap equity market reality and its massive global operational narrative. The market currently prices the stock as a highly speculative, high-risk venture, focused entirely on the historical dilutive pressures and the challenges of managing a complex acquisition-heavy business model. Yet the reality of their recent earnings beat, their extensive patent portfolio in spatial audio, and their aggressive push into institutional tokenization and cyber insurance risk evaluation shows a leadership team that has swings for the fences. Whether you monitor your positions through premium Fidelity investment tools, track daily volumes via interactive brokers account metrics, or execute quick trades on SoFi Invest, Datavault AI remains a stark reminder that in the technology sectors, the gap between what investors believe today and what the operational data proves tomorrow is where the real market fortunes are made and lost.